Bitcoin's price fell below $46,000 in the early morning of December 14th, reaching a low of $45,747. It has dropped by more than $20,000 since the previous month's peak. There are just over 2 weeks until the end of 2021. The likelihood of a recurrence, like the explosive tops in 2013 and 2017, is low despite the fact that all of the indicators on the chain are trending upward. The attitude of analysts on Twitter is also as optimistic as ever. From the 200-day average line, Bitcoin's trend has only slowed down a bit, and it has not completely entered a recession, judging from the data changes in the past 200 weeks. The fundamentals are also healthy. From the data on the chain, out of the 21 million Bitcoins, 90% have now been mined, and the remaining 10% is too difficult. It will take a full 119 years to complete the mining, so the existing Bitcoin will be more valuable. Some analysts even believe that with the increasing supply of Bitcoin, the past 2 declines have triggered a sharp rebound in prices. Is the third rebound now also on the way? All signs seem to say, Bitcoin you should go up. Must go up. But why didn't it rise? Because we overlooked some other subtle changes. For example, from the perspective of Onchain transaction data, the main differences between now and May are: May, the former strong hand becomes the weaker no. Now, strong players buying from weak players. A clearer statement is the currency is more concentrated. The power of capital is stronger, and there are fewer coins in the hands of retail investors in the market. At the same time, purchasing power is falling moderately, but there are no signs of further selling. As prices fell, the exchanges resumed supply with a little inflow, but it was still in extremely low supply. To prove this point, we put together the address balance and price of a certain exchange and made a comparison. It was obvious that the balance rose sharply around December 2nd and December 11th. It shows that the exchange circulation is continuously recovering, which is a positive signal. The illiquid supply continued to hit new highs, and the market supply dropped again. In other words, the number of coins mined is always increasing, but the number of coins that can be circulated in the market is constantly decreasing. Bitcoin holdings in 1K, 10K addresses have been reduced, and 10K, 100K addresses continue to increase. Therefore, in one sentence, the seller does not want to sell, and the buyer does not want to buy, resulting in an extreme balance between longs and shorts, and resulting in insufficient liquidity. Next, it is very likely that there will be further price reductions, again forcing more currencies to be sold, allowing these currencies to return to the exchange, shaping liquidity, or attracting new capital at a lower price than the current price, and increasing the power of increasing prices. This is why market sentiment has been sluggish. Most people are waiting, and the patience of long-term holders is gradually fading. Of course, it would be ridiculous if you lose confidence in Bitcoin simply as a result of such a low-level shock. The development of anything does not involve smooth sailing. In fact, Bitcoin is now in a downward trend for only 5 weeks. The value of the US dollar has been in a downward trend for more than 50 years. And according to the latest news, Bloomberg information analyst Mike McGlone shared his vision for the future of the cryptocurrency market. We expect that the US will accept cryptocurrency in 2022, with proper regulation and related bullish price impacts. The analyst also pointed out, Bitcoin seems to be on the trajectory of $100,000 and we may see a bull market for suspension, correction and update. The analyst further shared as Bitcoin is approaching the first quarter of 2022. The key question facing Bitcoin is it reaching its peak or is it just a bull market that continues to consolidate? We believe it is the latter. And in such a trend, cryptocurrencies are moving towards becoming a global digital collateral. The key support level in 2022 may be around $50,000 and the resistance level around $100,000. Bloomberg Information also released a 2022 cryptocurrency outlook report last week. According to this report, although Bitcoin has fallen by nearly 30% since it hit a record high in November, It is still in a solid bull market and is expected to rise to $100,000. The report also stated that the BTC bull market is unlikely to stop and predicts that a fixed supply will push prices up. The report also emphasized how the 2021 adjustments will make Bitcoin assets stronger and the bull market healthier, because Bitcoin has withstood and broke through the mining bans of certain countries, setting new highs. In addition to reaching a high of $69,000 before breaking through in November, the Bitcoin network hash rate has also recently reached a record high, demonstrating the strong flexibility of its consensus protocol. The report also stated the main force to reverse the Fed's expected tightening policy in 2022 is the decline in the stock market, which may be a win-win situation for Bitcoin. If the stock market falls, Bitcoin will face initial resistance. But if the fall in stock prices puts pressure on bond yields and stimulates more central bank liquidity, cryptocurrencies may become the main beneficiaries, the report said. And in 2021, funds have begun to flow from gold to Bitcoin. In addition, Bitcoin's fixed supply is halved every 4 years to enforce deflationary appreciation, which may help it outperform stocks again next year, giving it an absolute advantage over the stock market. Therefore, when you are still experiencing price lows this year, are still indecisive, or panic, you should buy and hold boldly. You may not have the opportunity to buy again next year. Finally, I suggest you look out for the next BigONE Christmas activities. So, make sure you don't miss it. Happy Christmas, everyone.
Jingle bell, jingle bell rock. Jingle bells swing and jingle bells ring. Snowing and blowing up bushels of fun.